Hi everyone, my name is Heidi Hess and I am excited to be part of your group. I am going to take you through exercise number 5 in chapter 3 where we're going to be building some income statements. So the instructions are, as you can see here, a tabular analysis of the transactions made during August 2017 by Sunland Company during its first month of operations. Is shown below. So here's our information. Each increase and decrease in stockholders' equity is explained. So we should be pretty familiar with this by now. There's some information over here that we'll be able to use. So to start this off, so this is as it says here, this is its first month in operation. So the income statement that we're going to be doing is going to be for the month ended August 31st, 2017. So we start off with the revenues, and as we see here, we've only got one kind of revenue, which is a service revenue. So we'll go ahead and put service revenue here. And that was $9,200. So we'll put $9,200 here. So that's all of our revenues. Next, we need to do expenses. So our first expense, we've got a salaries and wage expense of $2,800. We have rent expense of $830. And we have utilities expenses of $400. So total expenses is, as we add that up, sorry, 2,800 plus 830 plus 400 is $4,030. So our total net income is 9,200 minus the 4030. So our net income is 5,170. So I'm going to go ahead and submit. This is a three-part answer, so we have to submit the first one to be able to open up the second section. So I'm going to go ahead and submit. And yay, I'm correct. So that's a good thing. So now the next thing we get to do is create a retained earnings statement. So for the retained earnings statement, this is going to also be for the month ended August 31st because this is only 1 month of operations. So we start with the retained earnings as of August 1st, which is $0 because this is our first month of business. So we're going to add in net income, which as we see here is 5,170. So our total is 5,170. Then we're going to do less any dividends paid. We'll go back up to our chart up here. And as we can see here, we paid out $2,500 in dividends. So we're going to put the $2,500 here. So our retained earnings as of August 31st is the 5,170 minus the 2,500, which gives us 2,670. So we'll go ahead and submit that. Yay, we're correct. So the next thing we get to do is do a classified balance sheet and make sure we note here the current assets need to be listed in order of liquidity. So the balance sheet is as of August 31st, not the month, but just the date, because the balance sheet is always a date. So we'll start out with our current assets. We've got to list them in order of liquidity. So let's take a look at our assets. So we've got cash, this cash column right here, which is going to be our most liquid. So the total amount on the cash, as we look at the transactions through the month, we're going to have $16,000 minus the $1,980, minus the 580 plus the 3,500 minus the 2,100 minus the 2,500 minus 830 plus 550 minus 2,800. That leaves us a balance of $92.60 in cash. The next item that we have for current assets would be accounts receivable. So as we see here, we have $5,700 in accounts receivable minus the $550. So that equals $5,150. So we're going to go ahead and put accounts receivable here, and our total was $5,150. The next thing that we have as far as assets go are supplies. So we've got a balance. There's no other transactions as we can see here. So our balance right now is $580 in supplies. And that totals, that's the end of our current assets. So total current assets, when we add them up, whoops, sorry, we've got $92.60 plus $5,150 plus $580. Gives us $14,990. So we'll put $14,990 here for our total current assets. The next item is going to be our plant, plant, property, and equipment. Now the only thing that we have on here is equipment. So we've got $5,030 in equipment. There's no other transactions there, so that is our total. So we'll go ahead and put equipment here. So then total assets is going to be the $14,990 plus $5030 is $20,020. Double check my numbers there. Okay. So next we need to do liabilities. So we've got current liabilities. And when we look at the current liabilities, the only thing that we have on as far as liabilities are accounts payable. So when we add up the transactions throughout the month for accounts payable, we've got $30.50 minus $2,100 plus $400. So $13.50 in accounts payable. Okay, so accounts payable is the only liability that we have. So next we're going to go ahead and move on to our stockholders' equity. The first thing that we've got is common stock. So we come back up here in common stock, we've got $16,000 here. There's no other transactions. And so we will put the $16,000 total in for your common stock. The next thing we've got would be the retained earnings, which we can either calculate from up here, or we can actually, the easier solution would be to go from your retained earnings statement. So your retained earnings as of August 31st is 2670. So we'll go ahead and do 2670 there. So total stockholders' equity right here is the $16,000 plus the $2670, so $18,670. So then we've got at the bottom total liabilities and stockholders' equity is the $18,670 plus the $13.50 in accounts payable is $20,020. And as you can see, both balances match. So the assets equal the liabilities and stockholder equity. So we'll go ahead and submit the answer. And yay, the answer is correct. All right, hopefully that was easy enough for you guys to follow. Please contact me if you have any questions whatsoever. Again, my name is Heidi Hess. My contact information is in my BYU Idaho profile. I hope you guys all have a wonderful day and a wonderful night, and I'll talk to you soon. Thanks.